BigBear.ai and SoundHound AI are two up-and-coming AI stocks that not very many stock market investors know about. They're certainly not as well known as Nvidia or Microsoft as some of the most popular AI stocks in the market today. Still, if investors are looking for smaller AI stocks that could potentially exponentially increase, they're considering SoundHound and BigBear.ai. But which one is the better buy today? That's the question I'll answer in this video, comparing these two AI stocks on a number of important financial metrics, including revenue growth, the balance sheet strength, cash flow from operations, shareholder dilution, and valuation to determine which one I think is the better AI stock to buy today. There's a lot to cover, so let's get right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. All right, starting with revenue growth, we'll notice that SoundHound AI has dominated BigBear.ai on revenue growth ever since July of 2022. In the most recent quarter, SoundHound AI grew revenue by 53.83%, while BigBear.ai only increased revenue by 3.44%. If you excluded the acquisition BigBear.ai made, it wouldn't have demonstrated any growth on the top line. So growth is certainly in favor of SoundHound AI, and it looks to be that way going forward as well. Now, the next thing I wanted to compare these two on is the operating profit margin. And these two are losing money on the bottom line, but that's okay when you're dealing with growth stocks. When you're dealing with companies that are innovating and growing, it's okay if they're losing money on the bottom line. But what I like to see is progress towards profitability. And of these two, SoundHound AI is the one that's demonstrating progress, even though its operating profit margin is much worse than BigBear.ai. SoundHound generated negative 132.6% operating profit margin compared to 28% negative for BigBear.ai. But the difference is SoundHound AI is improving, while BigBear.ai is flat to going backwards. So in these cases, it's hard to determine which one is better because you have one company generating much lower losses, and you have another one that's generating much bigger losses, but it's making progress towards profitability. Now, the next thing I wanted to compare these two on is the balance sheet. Because they're losing money on the bottom line, I want to know how much money do they have in the bank and how much long-term debt they have. And BigBear.ai has $195 million in long-term debt with $72 million in cash, so it's in a net negative position, whereas SoundHound AI has $200 million in cash and zero long-term debt. SoundHound AI clearly has the better balance sheet here by a large margin. The next thing I wanted to consider is shareholder dilution. Each of these companies is diluting shareholders significantly. SoundHound AI more so. You can see SoundHound AI in 2022 had less shares outstanding than BigBear.ai, but has proceeded to dilute shareholders meaningfully. It now has 331 million shares outstanding, compared to 246 million for BigBear.ai. Now, if you're losing money on the bottom line, there's two ways you fund those losses. Number one, you borrow money and you lose money. Number two, you raise money from shareholders by selling them more stock and you give them more equity. Now, that's why losses on the bottom line are so troubling, and it's important for companies to quickly get out of that phase because either option is not great. Borrowing money, you have to pay high interest costs. Giving up equity, you have to dilute shareholders, which BigBear and SoundHound AI are doing meaningfully. In this case, BigBear.ai has the advantage, although they are both undesirable in terms of the amount of shareholder dilution. BigBear.ai, in fact, added over 100 million shares outstanding in its latest quarter compared to the same quarter the prior year. Massive shareholder dilution, to be sure. So if they're losing this much money and the negative consequences are adding up, I want to see how much cash flow from operations to sales are for each of these two and if they're improving. And again, a similar story where BigBear.ai is better on the metric, just negative 10%, but SoundHound AI is improving, although the negative is meaningfully higher, more than 10 times worse, at negative 134%. But it is improving. And lastly, I wanted to compare these two on the valuation. Now, measuring by the forward price to sales ratio, you'll notice that SoundHound AI is more expensive, trading at a forward price to sales of 11.67, compared to BigBear.ai, which is trading at a forward price to sales of 1.719. The big reason for this difference in valuation is top-line growth. BigBear.ai, I mentioned earlier, only grew revenue by 3.44% in its latest quarter, and if you excluded the impacts of the acquisition it made, it wouldn't have grown revenue at all. It would have been revenue decreasing. SoundHound AI did grow revenue by 53.83%, but it also made acquisitions, and so some of that is acquisition related as well. The growth rates for these two AI companies have decelerated considerably, and they've made acquisitions to try and facilitate growth going forward. Now, artificial intelligence spending worldwide is expected to grow by the hundreds of billions of dollars between now and 2030, and even more so between now and 2040. Each of these two companies will benefit, that is, if they're still around. They are losing so much money on the bottom line that they may not be in business throughout the entirety of that time. Still, they do have excellent prospects and excellent potential because companies worldwide are trying to use artificial intelligence to enhance the services they offer their customers, increase productivity for employees, and reduce costs because they can use artificial intelligence to replace labor. So all of which points to strong industry growth for artificial intelligence, and SoundHound and BigBear.ai will benefit from that trend, to be sure. Now, to answer the question I posed in the beginning of the video, which one of these two is the better AI stock to buy today? If I had to pick one of these two today, it would be SoundHound AI. The company's growth rate suggests that customers prefer its service and customers are ordering its service. It's had many recent design wins, expanding not just to quick service restaurants, into automotive, and its recent acquisition of Amelia will open up even more markets for SoundHound AI. I feel its prospects are much better than BigBear.ai on the top line, and I feel that revenue growth gives it a better chance to generate sustainable business in the long run, where it won't be losing money on the bottom line. So for those reasons, if I had to pick, I would pick SoundHound AI today as the better AI stock. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.